everyone, welcome to the Wealth Capital. So let's say you want to get started with this investing thing. You might have a bit of money saved, it's probably not enough for a house, but you decide you should probably invest it in something. You could invest in stocks, shares, equities, government bonds, corporate bonds, real estate, foreign exchange, crypto, NFTs, futures, fine art, watches. There seems to be tons of stuff out there. The ultimate guide to investing for beginners. And we're going to split this up into 4 parts, which are going to be time-stamped so you can skip around if you feel like it. Part 1 is going to be about the basics and the philosophy behind investing. Part 2 is about why and how to invest your money in stocks and shares. In Part 3, we're going to be addressing common fears and questions and concerns about investing, like what if I lose all my money? And then in Part 4, we're going to talk about fast lane investing, which is an alternative approach to the traditional investing thing to build wealth. Part 1, master the investing basics. First things first, why invest? Your savings lose power to inflation. That $100 today buys less tomorrow. Investing flips it. Make your money generate more money through income like dividends or rent or appreciation, selling higher. Key types: stocks, company ownership, bonds, loans to governments or companies, real estate, property, crypto, digital assets, even art or watches. But for beginners, avoid high risk like day trading or Forex. That's gambling. Start with low risk, long-term growth. Richard's pro tip, think of investing as hiring your money as an employee. It works 24/7, compounding over time. Example, $100 at 7% annual growth becomes $200 in 10 years, $400 in 20. Step by step. 1, assess your finances. Emergency fund first. 2, set goals. Retirement, house. 3, educate yourself with books like Rich Dad, Poor Dad. This foundation hooks you into action. No more watching your cash shrink. Moving to part 2, why and how to invest in stocks and shares. This is where the action happens. When you buy a stock, you're grabbing a slice of ownership in a company like Apple or Tesla. You're not just a customer, you're a part owner. To make it happen, step 1, you need a broker, a simple online platform. Sign up for a broker in your country by searching Best Stockbroker, your country, and choose one with low fees. Once set up, deposit funds and buy shares directly. Profits come 2 ways: price appreciation, sell higher later, or dividends, like BT paying out quarterly. But here's the game changer. Step 2, don't pick individual stocks unless you're a pro. Warren Buffett, the investing legend, says average folks like us should avoid it. Why?
The average person will not know enough to know which stocks to buy. They won't know enough to know when to buy them, but they don't have to, because they can buy all of America through an index fund.
And you won't outsmart the market experts. Instead, invest in an index fund like the S&P 500, a basket of the top 500 U.S. companies, Apple at 6.4%, down to smaller ones like Hasbro. Your money diversifies automatically. $1,000 splits proportionally. Historically, it grows 7 to 10% annually after inflation. Buffett bets on it. Own a cross-section of America and forget it. This is passive power. No daily stress, just long-term gains through compounding. Ignore gurus pushing day trading. This is the smart, sustainable path. Now, part 3, tackling those nagging fears and questions, because knowledge crushes doubt. First, what if I lose all my money? Investing has risks, but index funds minimize them through diversification. One company tanks, others rise. History shows markets recover. The S&P 500 has always bounced back from crashes like 2008 or COVID. Step 3, adopt a long-term mindset. Hold for 5 to 10 plus years, not days. Avoid timing the market. Invest consistently, dollar cost averaging. Buy fixed amounts regularly. Other concerns: when should I start? Now. Time in the market beats timing the market. Even with $100, begin. How much do I need? Any amount. Many brokers have no minimums. Use tax-advantaged accounts. Step 4, set up automatic investments. $50 a month adds up massively via compounding. Is it too complicated? No. Apps make it effortless. Remember, past performance isn't a guarantee, but data favors patient investors. You're not risking everything, you're building security. Finally, fast lane investing. Turbocharge your wealth beyond traditional stocks. While index funds are solid for passive growth, the fast lane means investing in yourself and high return opportunities. Step 5. Start a side hustle or business, like creating content, freelancing, or an online course, YouTube channels, social media manager, event manager, drop shipping, selling items on eBay, or renting out your belongings. Why? Because returns can hit 20 to 50% annually, dwarfing stock averages. Step 6. Learn skills. Read books like Rich Dad, Poor Dad, The Psychology of Money, and Atomic Habits. Step 7. Diversify income. Combine stocks with active ventures. Donate 10% to charity for good karma. This isn't get rich quick, it's strategic acceleration. Imagine your investments compound while your business explodes. In closing, investing transforms your future. Start small, stay consistent, and watch wealth build. Take action today. Open broker account, invest in an index fund, and explore a side hustle. You've got this. Your financial freedom awaits. If this inspired you, like, subscribe, and let's build wealth together.